Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A long black bearish harami on Friday, if only just, after the previous session's bullish long white Mariboso and second bullish white soldier. The market closed back down below the purple neckline extension to the January to February 2021 reverse head and shoulders pattern, currently 110.03, but above the combined support of the dark blue July 2017, November 2018 head and shoulders neckline, currently at 109.72, along with a close by 50% Fibonacci of the January 21 to September 22 move at 109.44. Further up, we have the combination of the bright green July 2008 to date downtrend, currently at 111.32, and the congestion at 111.39 made up from the March, I think it's 2020 or thereabouts, and December 2023 highs. This area capped the market last Thursday. Let me just double check that one. Yeah, it's made up from the March 2020 and December 2023 highs. This area capped the market last Thursday. Further up, we have the September 2024 high at 112.13. The pink May 2011 to date downtrend, and that's currently at 112.40, and a significant July 23 high at 112.76. Meanwhile, below, look to the gold long moving average, currently at 107.32, and the 250% Fibonacci lines at 107.09 and 106.78. The move higher revitalizes the idea of a possible annual key reversal pattern here. So please keep an eye overhead on the September 2024 high at 112.13. You see, if prices exceed that, when we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that. That all being said, we also have set up the conditions right now for the whole March today action to be a bullish halfway hesitation with potential target X up in the 112.75 area. So far today, a gapping open lower since filled in, with prices moving up and pushing through the combination of the dark blue July 2017 to November 2018 head and shoulders neckline, along with the close by 50% Fibonacci line of the January 2021 to September 22 move, and now testing the breached purple neckline extension to the January to February 2021 reverse head and shoulder pattern. Cable, aka sterling against the US dollar. A long black bearish engulfing pattern on Friday after the previous session's second bullish white soldier. It was also a weekly key reversal down. Prices dropped back down and were halted by the November 2020 low at 128.52. Late last week's rise reached target X1 up at 131 even for the breakout from the January to early March dark blue ascending wedge pattern, with prices peaking last Thursday at the purple neckline extension, currently 132.25, of the small mid-November to early December 2024 reverse head and shoulders continuation pattern. Now looking below the November 2020 low, we have the slowly rising gold long moving average, currently 128.13. And then the twin 50% Fibonacci congestions at 127.34 and 126.99. Okay, so I recently asked you to continue keeping an eye overhead at the September 2024 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, some of which I've already mentioned, but I'll also add to these the following: a Fibonacci and market high based congestion area between 132.46 and 132.98. That includes just outside it the bright red 2021 to date downtrend, currently at 133.06, which is about to go into it. And that's before we reach the September 2024 high. Now, there has been a question raised as to whether the whole March today action is a possible bullish halfway hesitation. This question is open, and right now I have my doubts about it, because if it did happen, it would be a very, very sloppy one. Now, so far today, a gapping move lower, below the November 2020 low, and down to try the gold long moving average further down, which has been so far rejected, and the gap filled in. Now prices have moved back up over the November 2020 low and into the very recent congestion between 128.65 to 130 even. US dollar against the Japanese yen. An immediate countering bullish harami yesterday, if only just, after the previous session's bearish opening long black Maribosa. Prices dropped down to the combination of the 50% Fibonacci line, the January 23 to July 24 move at 144.58, and the broken pink upper trend line currently at 144.35 of the well highlighted early February to late March descending wedge pattern. This pattern had been the very recent driver lower and helped an earlier rounded top pattern reach its primary target. However, attempting this proved to be too much for the market, and prices reverted higher, finishing up just over the lesser Fibonacci line at 146.69. Overhead, we still have the formidable resistances provided by the combination of the bright red upper time, currently at 150.68, of the July 24 to January 25 bearish Andrews pitchfork, as well as the 50% Fibonacci line of the July 23 to July 24 move at 149.61, and the declining long moving average currently at 151.13, and the short moving medium moving average currently 150.78, which incidentally those two have just formed a dead cross last week, plus the eroding effects of the 50% Fibonacci line for the whole of 2024 at 150.76. All these sit solidly right now well above the market. Overall, the market remains within the larger big picture bearish item, and that is the big bright red July 24 to January 25 bearish Andrews pitchfork. This pitchfork shows the bearish angle of attack of this market. So far today, well, a slightly higher open, but an immediate push lower once more, below the Fibonacci line at 146.69, the 50% there, and towards a combination of the 50% Fibonacci line at 144.58 and the pink upper trend line. However, whereas we were at one point looking like a combined bearish opening black Maribosa and bearish engulfing pattern, prices have since pulled back up and we're looking like a possible hanging man pattern right now. US dollar against the CNH, the offshore Chinese yuan. An immediate countering bullish double, a really good looking one as well, plus a possible bullish engulfing pattern, all on Friday, all with a long tail on it, after the previous session's bearish harami and shooting star pattern, type 1 bearish. It was also a weekly key reversal up. Now prices closed back up over both the bright red middle time, currently at 728.43, of the shallow bright red late December 24 to late January 25 bearish shift pitchfork, as well as the mauve medium moving average, currently 728.26. The action looked like a further justification of the recent break above the dark blue downtrend, currently at 724.26 of the January to March descending wedge pattern. This break higher gives a primary target X in the 735.63 area and a secondary harder to reach target X1 up in the 741.28 area. The latter will be especially quite a reach. In the way, we have the July 24 high at 731.13, the congestion 734.41 to 734.96 with the bright red upper time just above it, currently at 735.08, and another congestion area between 736.81 to 737.49. This all still further confirms that the bright red bearish shift pitchfork is the main immediate pattern to watch here. Now so far today, a strong move higher from the open, up through the July 24 high, though not as yet as far as the 734.41 to 734.96 congestion. US dollar against the Brazilian real. An immediate countering bullish engulfing pattern and bullish opening long white Maribosa on Friday. It was also a weekly key reversal up. Now prices punched up through and closed over the following. The key dark blue downtrend currently at 572.32, which has driven prices lower since mid-December last year. The slowly rising gold long moving average currently 574.77. The December 2021 high at 575.78. The green declining short medium moving average currently 577.69. The October 2020 high at 580.70 and the unreconstructed bright red uptrend currently at 584.06, with prices closing just over that last one. Overhead, we have the March 2020 high at 588.04. This was also the high back in late October last year, and then above that, The flatlining mauve medium moving average currently 590.54. Now, 3 weeks ago, the market achieved the primary target down at 563.35 for the drop down from the large early October 24 to mid-January 25 rising or expanding wedge pattern. The harder to reach secondary target X1 down in 541.95 zone has still been live, but with this recent move higher, I am going to retire this after today's commentary. US dollar against the Mexican peso. A bullish engulfing pattern and bullish opening long white Mariposa on Friday. It was also an outside week. The market, which had been held up by the significant congestion zone below between 1987.96 and 1991.31, as well as the reinforcements from below of the rising gold long moving average, currently 1983.28, rose up through the August 2024 high at 20.0445, the October 22 high at 20.1720, and significantly over the combination of the flatlining green short medium moving average, currently 20.3520, the flatlining mauve medium moving average, currently 20.3680, and the old bright red lower bull channel line, currently at 20.3791, of the very gently rising early November 2024 to early March 25 bull channel that become a rectangle top pattern. Now, prices came to a halt just under the September 22 high at 20.5765, the center of a congestion area, that is at 20.5765, stretching roughly between 20.1720 up to around 20.83 area, and finishing the session just over the bright red broken lower bull channel line. Now, we had the harder to reach target X1 down at 1948.90 for the earlier break below the rectangle top pattern. However, this looks unlikely now, so I'll retire it after this commentary. So far today, a basing action on the combination of the bright red broken lower bull channel line and the green short medium moving average. The mauve medium moving average for a fresh attempt higher over the September 22 high, but not up and out of the larger 20.1720 to 20.83 congestion area as yet.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.